Should you invest in companies with a very high dividend yield? Is a sudden peak in dividend yield a once-in-a-lifetime opportunity to buy a stock, or should you stay away from it? Find out in this Finance Storyteller video. Once upon a time, in a land not so far away, a reliable and stable company, let's call it Stabilicom, had been cruising along nicely for years, maybe decades, maybe even more than a century. Slow but steady revenue growth, profit growing faster than revenue due to cost control, and a dividend yield on the high end of the market average. Time after time, the CEO of Stabilicom told the financial community that his company was the hallmark of stability, even in times of economic turbulence, and had exciting growth opportunities ahead. Then one day, the company issues a profit warning. It missed its numbers for the quarter and revises the full year estimate downward significantly. The market reacts in a panic. If even Stabilicom couldn't deliver on its commitments, who would? Sell! 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 The Stabilicom share price drops sharply, dragging other stocks and the overall index with it. One investor, let's call him Joe, keeps his calm and recognizes that the sign for danger and the sign for opportunity are closely related. Joe decides to buy some shares in Stabilicom. After all, hadn't the CEO of the company just said in an interview that the profit warning was just a pause before growth resumes, and that the dividend is secure? And now that the share price has dropped so much, the dividend yield on Stabilicom shares looks very attractive to Joe. Right around that time, Joe starts dating a seismologist named Jane. On one of their first dates, Jane explains to Joe some of the basics of studying earthquakes. When Jane mentions the term aftershocks, Joe realizes that earthquakes and aftershocks are a very appropriate metaphor to use when describing stock market declines, and Joe decides to sell his shares in Stabilicom the next day, just in case an aftershock occurs. With the benefit of hindsight, Joe realizes his timing to sell the shares was great, as the Stabilicom share price drops very sharply, once again, when its CEO has to admit in a second profit warning that the company's trouble in growing revenue and profits is of a more permanent nature, and Stabilicom has to cut its dividend payment to shareholders, as it needs all the cash it can lay its hands on to ensure business continuity. Its ability to pay salaries to employees and pay bills to suppliers is at risk. Joe and Jane lived happily ever after. Stabilicom changed its company's name, and the future of the CEO is as yet unknown. Rumors are that he might be leaving the company to spend more time with his family. So what does this tale look like from a graphical standpoint? The share price is on the left, dividend in absolute amount in the middle, and dividend yield percentage on the right. Stabilicom started off with a share price of $100, a dividend of $4 per share per year, and hence a dividend yield of 4%. The share price dropped after the first profit warning. The share price is a function of investors' perception of a company's future. After the profit warning, the future did not look as bright as it did before, so the share price dropped to $50. At the time of the profit warning, the dividend was said to be secure at $4, therefore the dividend yield spikes to 8%, $4 dividend on $50 share price. At the second profit warning, the future of the company looks even less bright. Pessimists or realists would even say gloomy, and the share price drops to $25. Due to the cash flow problems of the company, the dividend is cut from $4 to $1. The dividend yield goes back to 4%, $1 dividend on $25 share price. But even though the dividend yield is back at the old level of 4%, you have had a very rough roller coaster ride downhill if you stuck with the company as an investor. What is the moral of our high dividend yield fairy tale? Beware of once-in-a-lifetime dividend yield opportunities, if they look too good to be true. I hope you enjoyed this short video about unusually high dividend yields. I have many more videos available on my channel that can help you in doing your analysis of financial statements before investing. On this end screen, there are a few suggestions of videos you can watch next. Please subscribe to the Finance Storyteller channel, so you can stay up to date on my latest videos for free. Thank you.